Hi, I'm attorney Nick Nemeth, and I want to talk to you briefly about Form 1099-C from the IRS. Are you aware that if a home is repossessed or a vehicle is repossessed, or a home is foreclosed, I should say, that the amount that the creditor loses by doing so can become taxable income to the taxpayer? The creditor will issue a Form 1099-C on a discharged debt, and you generally owe the tax on it, but not always. A recent case in tax court shows that a man who owed on his credit card debt failed to pay up, and the credit card company eventually wrote off this debt. More than 10 years later, a collection firm acquired the debt from the credit card company and started to contact the taxpayer to collect, even though the state's debt collection statute had already expired. The taxpayer protested, and the firm ceased its collection efforts. Nevertheless, the collection firm issued a Form 1099-C reporting the debt cancellation income for that current year. The IRS said that meant the taxpayer owed tax on the amount listed on the form, but the tax court disagreed. In its view, the debt was discharged years ago, which is when the 1099-C should have been issued. So the taxpayer completely escapes the tax on the forgiven debt. There are other exclusions for waived debts as well. No income tax is due if you are insolvent at the time of the discharge, or if you have filed for bankruptcy, for example. So let's put that in context. If, for example, you can no longer afford the payment on a boat, and the creditor takes the boat back, and you then file a Chapter 7 bankruptcy where that debt has become discharged, then you no longer are required to pay the tax on that 1099-C which was issued. So you can exclude cancellation of indebtedness income, and to do so you use Form 982. If you have any questions, please don't hesitate to call me, 972-484-0829.